Hey folks, welcome back to another Alphabet challenge, and I'm actually going to start off on Friday, which is the previous week, but I'm going to be rolling some of my Google options forward. So on Monday, as you remember, I sold a put spread down here at 87, and I sold a couple of 92 calls and 93 calls as well. And that's what these are. This was the bull put spread, and these are my calls. And because Alphabet, it looks like it's going to finish this week a little bit above 93, I think what I'll do is roll my 93 calls forward to the next week and just let the 92 calls expire and get 200 shares sold at $92. So looking at this strategy here for my March 3rd, 92.93 short calls, I am short 2 positions for 93. So I'm going to right click this and roll. And this allows me to buy back the option for roughly $55. And then if I go to the March 10th expiration, which is next week, I'm thinking about choosing the 95 strike, and I can make about $85 or $86. I'm buying back my 93 call to close my position, but I'm opening a new 95 call expiring next week. Basically, I'm saying I'm okay selling another 200 shares of Alphabet, but I'd rather wait a week and have the potential to sell it at 95 than at 93, and I'm going to make, it looks like about 35 cents or so per strategy.
Order partially filled. Order filled.
There we go. So I made an additional $36 times 2, 72, minus a couple dollars of commission. So there's like 15 minutes of trading left, but ultimately I'm going to add in Canadian dollars to my weekly option strategy this week. So I made $406. I'm definitely going to sell 200 shares because my $92 covered call option here, this is going to get assigned. So I made $41 per contract, but I'm forced to sell them at $92 per share, even though Alphabet is going to close today at roughly 93.50. Here is a 5-minute chart, and the end of the day is right over here. So there's only like a few candle bars left, so it's going to end around that number. So I'm going to sell 200 shares at $92, and the $93 calls will not be exercised because they're rolled to next week at $95. So my total shares owned would drop down back to 300. My average cost has not changed. This is the current price of Alphabet right now. And I will have another realized loss here because if my average cost is 95, but I sold it at 92 essentially, then that's a $3 difference times 200 shares that I sold. So that's minus $600 on top of the minus 800. So that's minus 1400. But ultimately, I am still up just because Alphabet went up in price this week from 89 to 93, lower than what it was in week 31, $94. But overall, I should be still up over the week 31. Yeah, so week 31, 4,700. Now I'm at 5,300. And that's mainly because I've earned another like $237 in premiums over that time. So even though the stock is roughly $1 lower than it was a couple weeks ago, overall my earnings still went up a little bit. So that is the advantage of continuing to earn premiums. In fact, I've earned almost $8,000 in premiums, which is the main reason why my ROI so far is positive 43. Because if I just rely on the stock itself, obviously that's down since I started this when it was at over $100. Okay, so now let's jump over to Monday and see what the stock price is doing and what kind of new options I can make. All right, so it's Monday, March 6th. And as you can see by the daily candle over here, the most recent green one, the Alphabet still wants to go up, and now it has gone out of this red bear channel again. So last week I had my 92 calls exercise, and then I bumped my 93 call up to 95 for this week. So I'm going to see where the 95 call ends. But in the meantime, you can see the MACD here curling up, and it's about to cross the signal line, which means the next few bars are most likely going to be green like these ones over here. And when that happens, the stock typically moves up. So I'm going to have a bullish bias for this week, ending over here on March 10th. So I think the stock is probably going to finish somewhere up here and not likely to go back below the top of this bear channel, which is about 93. So I'm actually going to use my 92, 93 calls last week as my short puts this week. So looking at the option chain, I can sell a 93 and a 92. And if both of those get filled, then I will have essentially bought back the 2 shares that I sold last week, and I'll try to get $86 for now. And I'm actually going to sell another put down here where this yellow line is, and this yellow line represents a nice support level over the last few months. So it's definitely very unlikely for the stock to drop all the way down here to $88. But I also noticed that the stock peaked last time at about 97.73. So that should act as a level of resistance.
Order filled.
Okay, it looks like the 2 puts at 93 and 92 were just filled. I'm going to get rid of this 87 put because that's no longer needed. So like I was saying, there seems to be resistance over here as well at near the $98 mark. So I'm just going to sell a call spread, selling the 98 and then buying the 99 and see if that gets filled today.
Order filled.
All right, looks like that was filled as well. So for Alphabet that's week, that's $87 plus 17 minus commissions, which is about $100 US or 136 Canadian. Now there is a chance I'm going to sell another 200 shares this week because I am short the $95 call for 200 shares, which right now is actually in the money, which is why there is an unrealized loss so far. If Alphabet finishes the week on Friday, like around 95, 96, then I might roll this to a $96 call. So I can at least get $1 more per share by selling my Google stocks. But as of right now so far, I still have 300 shares. We'll have to see how it goes. So thanks a lot for watching, and I'll keep you guys posted in the next one.